This show has a lot to talk about and go over. Because BlackRock made a big statement recently about cryptography, the institutions are showing their support by making a picture that is correctly written and created. The makeup shows that institutions are putting together a lot of money that will soon be available in the markets, which we will look into more detail. Besides Bitcoin, we'll also talk about XRP. Let us now get right to the amazing information that David Schwartz is giving us. About the XRP system, I'm sorry, but Bitcoin is $65,000. Oh, have I said sorry, sneeze? 62,532 in the last 24 hours. Bitcoin's value has dropped by 83%. After 24 hours, Ethereum's value has dropped 74% compared to USDT and USDC, which are both trading at 99 cents right now. XRP, on the other hand, is trading at a relatively low 53 cents. It's not available. 47% of the total value of all coins on the market is $186 billion. Where are we going? As we talked about on yesterday's podcast, I think Bitcoin will reach $66,000. My coworker Keith also said that the cryptocurrency business as a whole will be worth $2 trillion or $186 billion. He goes on, I still think this looks great. He says Bitcoin works like a computer and shows two charts from the same time 8 years ago to back up his claim. You can see that we've been following this blue line. Our situation puts us next to the parabolic blow off top, which is where Bitcoin is. As you can see, a big drop is likely to happen. We already talked about the fill and CME gap being between low and mid $50,000, so I think we'll only get to $66,000 before going down. Let's take one last step backwards before moving forward. This is a step toward the expected Bitcoin print of $150,000 to $170,000. All of the bull runs are shown on this chart. That Bitcoin has had since 2012. What do you think about this? The arrows show us where we are now, and the rising white line shows us how to get to the parabolic blow-off tops. From here, we can see that the 1.27262 Fibonacci levels are almost certain to be reached by Bitcoin on this chart. They run from 105 to 177,000. It began in 2016 and grew to include those friends. If we see that steep blow-off top, which we saw in 2012, we could be looking at $317,000 Bitcoin. Yes. That's right, that's what you heard. It is true that the price of Bitcoin has gone up from $317,000 to a high of $479,000. The question is whether this parabolic blow-up top will happen. It's not yet time to set the first goals. At 1.618 fib, our first area of interest will be between 105 and 177,000. The charts give us the chance to look at them and decide what to do next. We can expect a steep blow-off peak if the next round of institutional money doesn't come as planned. This money should give us a $7 to $10 trillion boost. The goals between the 1.2 and 1.618 Fibonacci levels will still be visible, even though the parabolic blow-up top is not likely to happen. This caused Bitcoin to reach these levels 12 years ago or more during the bull run. If one of your biggest moves comes up against you, it's best to back away. Check out this to see who wins. Here is a sneak peek at the pictures. So this will be one of the most well-known metaverses added to the XRP system. People are still thinking about this. We will start the 5th month of a 6-month building project in just over a week. It will hit hard and fast. Our build will end in the middle of December, just before Christmas. Hey, could you say what a great Christmas present it is? David Schwartz is here to talk about the XRP ledger. It says that XRP is the only coin that can be used to pay transaction fees. Each party to the deal needs XRP to meet these costs. The sole account can only have XRP as its only asset because it has no counterparty, no authority, and can't be frozen or clogged. On the XRP ledger, features like auto-bridging give it structural advantages. If a stablecoin can regarken no matter what happens to the RLUSD, however, most of what XRP does is better than what it gets, and as we talked about, XRP will lose more than one or more stablecoins. A lot of rubbish says that Ripple will stop using XRP for payments even though the company needs it to work on the system. Even though XRP is left. Ripple, the stablecoin, is still there. This means that whenever the stablecoin is used, XRP is also used since it is based on the XRP system. It is important to keep in mind that every transaction that goes through the ledger uses XRP for other operations. The value of XRP goes up as more people use it. It gets more deflationary as more XRP is burned, which creates a supply plus situation. As prices go up, demand starts to rise, and my prediction that the stablecoin will be offered at swell will come true. They are going to make the news. I would expect that to happen. They told people about swell, but it was already going. They also gave us examples of deals and told us who was making them. We have seen many examples of this stablecoin being created. Andrew should know about the structural benefits of the XRP system, just like people do, since stablecoins could replace XRP as a bridge. Everything, because XRP is built into the ledger and was always meant to be the best bridge currency. Those of you who remember the slide should now know everything they need to know. There is only one Brazil, and that's where I put out BlackRock. The world's first bank to use XRP for cross-border payments is based in Brazil, the same place where Ripple held secret talks with central banks. Now let's begin. BlackRock was recently in the news because they gave talks and talked about Bitcoin. BlackRock is an asset manager with more than $10 trillion in assets. I'd like to draw your attention to them. More and more people are using cryptocurrency on their phones and fast internet. We will have won a big battle, even if we only reach 1% of this $10 trillion goal. I think that between 5 and 10% of BlackRock's owners will sell their shares and buy cryptocurrency. Now pay attention to what BlackRock's head of theme investing has to say. I think a lot about the future and the upsetting things that are happening in the world that are changing society and the business in our area. We found that digital assets and blockchain technology are two of the technologies that have grown the fastest in the last few years. On the right side of the chart is our acceptance curve. This is often about tools that change things, but sometimes it's about changes in society. This is only looking at how quickly a society adopts certain assets. It's clear that digital assets and blockchain are getting on faster than a major revolution like cell phones or the internet. And there aren't many good reasons for that. The first thing is that our industry is more digital than ever. It makes sense to have digitally native assets for transactions that happen when we buy things online, stream movies, play video games, or stream content. This is especially important this year when elections are happening all over the world, including in the US, Mexico, India, and the EU. A lot of people are voting for new leaders, which is raising geopolitical risks and making people less trusting of institutions. There is a greater need for a world alternative to money now that people are less trusting. The population is changing, which is the third trend we're seeing. Gen Z and millennials are becoming less and less trusting of the government to keep the peace and the central banks to control inflation. Millennials are getting close to their prime years, and in the US we expect them to receive trillions of dollars in wealth. Running because they grew up with technology, millennials are different from older groups. As someone who grew up with the internet, they know how important it is to the business and jobs. We are more likely to use digital currencies because we know more about them than people from earlier generations did about computers. Lastly, I think that BlackRock's progress in using digital assets has been greatly helped by the growth of infrastructure for digital assets. Latif landscape has changed to support digital goods and the ways that people can buy them more. We've seen billions of dollars in venture capital and private equity move into digital assets to fund great blockchain new ideas. That is a very important statement from BlackRock about how regulations have changed and how people's views on the digital asset markets have started to change. That's what it takes to adopt. There needs to be some limits, and even though they are getting less strict, they are still not the best or greatest. But rules will be very important if cryptocurrency is to move forward into 2025 and let $7 to $10 trillion enter these markets, which would make everyone very rich.